Hey, what's up YouTube? On this video, I'm going to share with you one of the most important investment asset classes that you should be involved in. And I'm going to share with you the history of the asset class. I'm going to share with you what's happened over the last couple of years. And then I'm going to show you the long-term effects of how this asset class has been really effective in making sure that you're hedging against inflation and it's working in your favor to help you create wealth. Currently, this asset class is 3 times the amount in my portfolio of what my cryptocurrency holdings are. And my goal is to get it to 4 times as much because I believe it's that much more important. My name is Paris Clough and this is Financial Self-Reliance. On this channel we talk about the mindsets and the skill sets of the wealthy so that you can learn how to manage, protect, and grow your money. If that sounds like the kind of channel and the kind of community you want to be a part of, go ahead and watch this video. And if you get value from it, hit the like and subscribe button so that you don't miss any of the videos that I produce. Alright, so let me share with you what is this asset class. In fact, this asset class has been so profound that over the history of the world, it's the only one that has survived the test of time. What is that asset class? That's right, precious metals. Gold and silver. Gold and silver has been a currency in the world for thousands of years. Let's take a look at the history of gold and silver. Alright, this website is called Bullion. I'll put a link in the description below for you. I buy a lot of my gold and silver from this place. There's a couple of websites that I go to compare the prices, and whoever's got the best price at the time, that's who I usually buy from. But Bullion seems to have a really good price structure, and they're usually the one I end up ordering from. There's a couple others though that I do order from and have ordered from, and I'll put those also in the description below for you to take a look at those. One of the great things about gold and silver is, as it shows here, that for more than 6,000 years, human beings have coveted silver and gold consistently. And the gold treasures have been found dating back as early as 4000 BC. In 3600 BC, Egyptian goldsmiths began melting gold ores to separate the metal inside. So you can see that gold and silver, specifically gold in this particular situation, has been highly coveted for thousands of years. Here we go with silver. People began mining silver in 3000 BC in modern day Turkey. So we can see that for 6,000 years people have been coveting gold, 3,600 years gold and silver ratios. Since 3000 BC, what we now know today as modern day Turkey has been mining silver. So gold and silver became money in about 600 BC. And so for the last 2,500 years, we see that gold and silver has had a significant place in the monetary system and our ability to trade, to be able to buy things, and to have value in a monetary system. In 1971, for the first time, the world went to a fiat currency as a world currency. And unfortunately, that's going to probably prove its downfall. So President Nixon cut the ties between gold and the US Federal Reserve Note, which is actually what it's called, a Federal Reserve Note, but we call them US dollars today. And today, unfortunately, all governments issue a fiat currency. So let's take a look at the history of fiat currencies compared to the history of gold. So this chart here talks about the international reserve currencies since the 1400s. And what a reserve currency is that's the currency that the world basically uses as the foundation or the model for all of their currencies. And right now, the dollar or the US dollar, which is technically a Federal Reserve Note, is the world currency. All other currencies around the world measure their money or their currencies against the US dollar to determine the value. And that's what it means to be a world reserve currency. Unfortunately, in 1971, we removed that from being a gold-backed currency, and now it's completely fiat. It's based on the good faith of the United States. Unfortunately, all world currencies that are based on a fiat system are going to come to an end. And the United States, at some point, because we removed the gold backing from our currency, we will come to an end. It will happen. It's just a matter of time. It's just a matter of when, not if. So paper money, this is Voltaire, paper money eventually returns to its intrinsic value, which is 0. In a study, this is pretty interesting, in a study of 775 fiat currencies produced by Dollar Days, they found that 20% or 155 of the fiat currencies examined failed through hyperinflation, 21 were destroyed by war, 12% destroyed by independence, 24% were monetarily reformed, and 23% are still in circulation, approaching one of the other outcomes. So right now, of all the 775 fiat currencies that we've had over the course of time, only 23% of them are still going and still active. So what does that tell you about fiat currencies and their lifespans? This same study found the average life expectancy for fiat currency to be 27 years. The shortest being a month, and the longest, thankfully, is 320 years, so we'll see. So we see up here in this chart that the United States has been the world reserve currency since 1920, but we went to a fiat system or a fiat currency in 1971. Well, 1971 was only 51 years ago. And so if the average lifespan of a fiat currency is 27 years, as it shares down here, So we're due for a change here pretty soon. And I think that's a lot about what's going on with this world reset. That's why China is trying to fight for the world reserve currency. Russia's fighting for it. And then we're hearing a lot of information and doctrines about the Great Reset and going to global currencies. When fiat currencies fail, there's only one place to go, and that's silver and gold. That's the only money system that stood the test of time, number one. And number two, every other major economy that has been destroyed has been rebuilt by having gold and silver be the first stage of their monetary system. And then for some reason, the cycle continues where they think that they don't need gold and silver anymore and they move to a fiat currency. And then we see, within several decades, that collapses and then they're going back to the gold and silver. So my current philosophy is to hold physical gold and silver because it's just a matter of time before our fiat currency makes a change, and we're going to need to have that, what we've always had, what history has proven to be the one thing that stays consistent is gold and silver. With regards to that, let's see what JP Morgan says here. Gold is money, everything else is credit. And that's true. If you understand the Federal Reserve and how it works, it's based on credit. It's not based on or backed upon anything that's actually in savings. It's the worst way to build wealth. It's why our country's in trouble. And I hope that you're not building wealth on credit, that you're building wealth through actual stocks, bonds, mutual funds, physical gold and silver. Have percentages of your portfolio into each one of these things, because when things hit, you want to be able to have something that will help create a way for you to get out of it and be safe. And gold and silver is one of those asset classes that I highly recommend. All right, now what I want to show you is how gold and silver did in 2020 compared to other asset classes. So for 2020, gold finished the year up 24%. Gold was also a resilient asset. Silver's performance over the year was also sterling, offering investors 47.4% returns, despite a 34% pullback in March. So even though it had a pullback, it actually ended the year up 47%. So let's take a look, the roundup for 2020. Silver was the top, 47% total return. Gold was second, 24% total return, precious metals. The largest equities asset was half, less than half of what silver did in that same year. Now, in fairness, let's share with you what happened in 2021, because 2021 was not as good a year for gold and silver as 2020. All right, now this is 2021. So in 2021, gold and silver didn't do as well. The top asset class was cryptocurrency, 59.8% return. So should you hold money in cryptocurrency? Absolutely. With returns like that, you should definitely have some of your portfolio invested in Bitcoin and other cryptocurrencies, which I do. Then you go down the road here, S&P 500 did 26%, and gold and silver are all the way down at the bottom. So gold and silver had a bad year in 2021. However, they're looking to do much better in 2022 because they have an inverse relationship with the stock market. Usually what happens is the stock market goes down, we're going to see a gold and silver increase. And I don't know if you've been tracking the stock market lately, but we've had some red days. In fact, way too many red days as far as I'm concerned. So let's go back to JM Bullion and see that they've created this chart that compares gold value, the prices of gold, the value of gold as it's increased over the years in comparison to the S&P 500 and how the S&P 500 has grown as well. So for example, if you were to go back to January 2010, for 1 ounce of gold, it was $1,100. And for the S&P 500 was at $1,100 as well. Well, over time, you can see that the gold grew much faster in value than the S&P 500. However, you also see here in October of 2012, gold took a really huge dip and the S&P 500 continued to grow. So the reality is having diversity in your portfolio is important. And this is one of the exact reasons why you would have diversity in your portfolio. For a little while, for a couple of years, gold grew much faster than the S&P 500. But now you see the S&P 500 is growing faster than gold as gold is dropping down. However, we all know that you're supposed to buy low and sell high. So as that happens, gold being in December of 2015, gold is 1,000, just under 1,100, but the S&P 500 is over 2,000. That would have been a great time to buy some more gold because you get it at a discount. So as you can see over time, the S&P 500 is still climbing and growing as the gold is kind of going sideways. But then you see right around here, October of 2018, gold took a really sharp turn upwards, actually at the same time roughly that the S&P 500 did. In August of 2020, gold hit a peak at 1,900 an ounce. And the S&P 500 was at 33 or almost 3,400. And today you can see the S&P 500 is at 4,600 and gold is at $1,800. So if you look at the numbers, the S&P 500 did about a 4x over the last 12 years and gold barely did 2x, didn't even quite double. So you can see that gold is a good way to hedge against inflation and should be a part of your portfolio. My goal is to have about 20% of my overall portfolio in tangible gold and silver. I love precious metals. It's a great asset class to have and be involved in. And as you can see, it's done quite well in its growth. So as you can see by the numbers, the S&P 500 is definitely where you want to keep the majority of your assets and your wealth. I hope that after watching this video, you have a great respect for precious metals, for gold and silver, and what they can bring to your portfolio, the value that they provide over time, and the history that they have. The stock market is great, and it's a great way for you to build wealth and create wealth. However, long-term, thousands of years of history have shared with us and shown us that gold and silver keep their value. Gold and silver are the monetary system that has been around the longest. And if anything happens to our economy and we do see this great reset sooner than later, I promise you're going to wish that you had bought some gold and silver and that you had it on hand to be able to use. Because as you've seen, it's only a matter of time before a fiat currency fails. I hope you have a great day, and I look forward to seeing you on the next video.